Michael Burry has been one of the most talked about investors in recent months. On his Twitter page, Cassandra, a Trojan priestess who uttered only true prophecies but was never believed, the guy is certainly not afraid to express his opinions and thoughts on the state of the economy. It's fair to say that the news coming out of Michael Burry's mouth recently hasn't been the most upbeat you've heard in recent months. He's repeatedly predicted a massive stock market plunge and believes we're not even there yet. But even more intriguing than his tweets, Michael Burry, as an investor with over $100 million in assets under management, is required to file a 13F filing every quarter, which reveals what he's been doing with his own portfolio. And, as you may have noticed, his most recent 13F filing has definitely caught the attention of the investing world. So in this video, we'll go over essentially what Michael Burry has been saying on Twitter over the last 2 weeks, and then we'll go over his 13F filing to see what we can gather from it. So far, we've all heard the story. Michael Burry was tweeting about how he was correct about inflation, how the market was bound to fall off a cliff due to the Fed's poor management, and how it's going to get a lot worse than anyone expected. However, the market has risen significantly in recent months. The S&P 500 is up about 17% since its June low. This would normally cause many doomsday forecasters to go back into a dormant stage. But we're not getting any of that from Burry. In fact, he is placing more emphasis on his prediction that the stock market will become a lot worse, and he has repeatedly referred to the current market performance as a short-term bear market rally. He observed parallels and bounces during the tech bubble crash. He also declared the Nasdaq to be in a bull market because it's up 20% from its low. The Nasdaq did this 7 times after 2000, falling 78% to its 2002 low. He also stated that the S&P 500 had completed a 22% 2-month rally, and the Nasdaq had completed a 43% rally. In late 2002, the S&P fell another 42%, and the Nasdaq fell another 48%. In 2001, they believed they were about a third of the way to the bottom of that crash. Investors do understand that they must be aggressive in order to succeed and repurchase tech stocks, in particular, ahead of good news. It's simply a case of projecting events into the future. It's interesting to compare those views to today because many news articles suggest that the worst is over and we're back in a bull market. Clearly, Michael Burry does not believe so, and his most recent 13F filing supports his words. In case you're wondering what a 13F filing is, it's essentially a filing made by popular money managers 45 days after the end of a quarter, which shows us their stock portfolio at the end of that same quarter. So all of the big names like Warren Buffett and Charlie Munger, Bill Ackman, and of course Michael Burry file one. Michael Burry's 13F for Q2 revealed that he sold out of virtually every position he held at the end of Q1. At the end of the first quarter, he owned 11 stocks, including Google, Meta, Booking Holdings, Stellantis, Warner Brothers Discovery, and Bristol-Myers Squibb, among others. He was even holding a put option against Apple. However, by the end of the second quarter, virtually all of those positions had been eliminated, and only a small new investment in Geo Group had replaced them. As a result, all of the headlines read, "Michael Burry has dropped everything! Doom! Fear! Run!" However, this is consistent with what he's been declaring about the stock market and the overall economy over the last 3 months. He's been saying that he believes the market is going south, so if he truly believes that, it makes sense that he's selling. He had liquidated his assets and returned to cash, so his actions are consistent with his words, which is more than can be said for many other names. But what does this mean for regular investors like us? Many people have recently stated that they are also selling down their portfolios as a result of Michael Burry. It's reasonable that many people become paralyzed by fear and seek to sell. There's even a Twitter account called Michael Burry Stock Tracker that has 44,500 followers who promote the idea of simply copying Michael Burry's trades. Sadly, you can't take much from this because he has repeatedly demonstrated that while he is value-oriented, he isn't always concentrated on the long term. He's not even thinking about the medium term. His positions are almost always centered on the short term, and the only time 13Fs are ever useful to regular investors is when you know the super investor is doing it for the long term. Why? Remember that the 13F filing only shows us a portfolio snippet at a specific point in time, such as the end of business on March 31st or June 30th. If you follow the 13F of someone like Michael Burry, the portfolio may change multiple times between those dates, so the data you receive as a long-term investor may be laden with misleading signals. Burry could have purchased those Apple put options on March 31st and then sold them on April 1st. Despite receiving the 13F filing only recently, there's a good chance Michael Burry no longer owns Geo Group. It's unfortunate, but it's true. In the grand scheme of things, the 13F information from people like Michael Burry means almost nothing and should not be acted upon. If you followed Michael Burry into Meta on the 16th of May when his Q1 13F filing was made public, you'd be worried now because A, Meta has dropped 12.5% since then, and now on top of that paper loss, B, you have the reports that Burry has now exited the stock as quickly as he entered it. What plan do you have? Do you follow the bandwagon approach and take the 12.5% in 3 months, or do you hold on to the stock and hope for the best? This is why when reading the 13F filings of someone like Michael Burry, you should always take them with a dose of caution. Although, in general, 13F filings are fantastic sources of information, especially if you follow long-term value investors like Warren Buffett. In these cases, changes in 13F filings are extremely interesting. And the reason for this is that the data is likely to be completely sensible by the time it reaches you and for many years to come. You can look at Warren Buffett's portfolio background via his 13F filings. Take a look at his top 10 picks. You will notice that his holdings have remained consistent over 3, 5, and 10 years. Almost no changes over time, and when something does, the changes are usually permanent. When you compare Buffett's 13F history to Michael Burry's, you can see that his portfolio has no discernible pattern dating back to Q4 2018. As a result, investors can gather very little from the data. But aside from the short-term nature of his investments, another reason you should give a second thought about using any of Michael Burry's 13F data is that Michael Burry himself is kind of a loose cannon who can deviate from the tried and tested Buffett-style investing method. Sure, he is analytical and value-oriented, but he also places bets where others would not. In Q2, for example, he purchased Geo Group, a private prison contractor. However, if we focus solely on Wall Street, there are some noteworthy issues. Revenue doesn't mean much to a conventional long-term value investor looking at past performance. Their earnings have fallen. Their ROE, ROA, and ROCE all have low values. Their debts are high, with a debt-to-equity ratio of 213%. Take note that we are not passing judgment on this stock based on a few figures, because they are also restructuring debts and selling some of their prison facilities for large sums of money. Not to mention that it trades about 5 times free cash flow. However, it demonstrates that Burry isn't afraid to go where many other value investors would not. So while the guy can be very interesting and funny on Twitter with his market commentaries, he's not an investor you'd closely follow at 13F time, and maybe in another 3 months. It wouldn't be surprising if his reported portfolio differed significantly from what we see now, because that's exactly how he approaches investing. That's all we have for today. If you'd enjoyed the video, why don't you give us a like and subscribe to our finance channel? Don't forget to hit the bell button below to get notifications on when we'd post next. Thank you for staying till the end of the video and hope you enjoyed. See you next time.